Hi guys, Rachna Ranade here and I welcome you all to my video lecture series. And today's video we are going to talk about PE ratio. Well, there was a lot of many requests from you all wherein in fact I had only asked whether I should make a video separately on PE ratio or not. And many of you gave me a thumbs up, so I thought let me make a separate video on PE ratio. What is going to be the structure of this video? First I'm going to talk about the meaning of PE ratio, then we are going to talk about how to interpret the PE ratio. Third, we are going to talk about what are the different types of P ratios, then followed by how to interpret the market P ratio. And towards the end, basically, we are going to talk about a final conclusion about P ratio. So now we are going to talk about exactly what is PE ratio, its meaning. P stands for the market price per share and E stands for the earning per share. So that's how I've given you a simple formula for PE ratio. It's calculated as market price per share. The question is, how do I find this market price per share? That's nothing but the last traded price. You can see that on NSE India website, BSE India website or Money Control or any other website. Second one is earning per share. Okay, but earning per share is something which we will have to calculate first and then we can put it in this ratio. Okay, how to calculate earning per share? It's very simple. It's calculated as PAT. PAT is nothing but profit after tax and then we divide it by total number of shares. I'll give you a very simple example. See, PAT, if you remember in my previous video wherein I had talked about fundamental analysis of L&T, I had actually talked about two concepts, top line and bottom line. And I said bottom line is nothing but profits after tax. So let us take a very simple example. Let us say 2 lakh rupees is the profit of any company after tax. And let us say that the company has total 20,000 number of shares. This is absolute simplicity of calculation. Then what will be the EPS? EPS will be profit after tax divided by total number of shares. That is rupees 10. Simple till here? Okay. So what is the meaning of this 10 rupees? Where do I substitute this in the PE ratio formula? So let us check this now. Let us say I'm copying it here. So earning per share is rupees 10 and okay, maybe it's just need to take the value score space special karke, maybe I'll just space special and value. Okay, I could have typed it faster. Okay, so let's say that is rupees 10 and assume that the market price is 100 rupees. Okay. So now the question comes up is, what is the P ratio? P ratio is very simple now, 100 divided by 10 and our P ratio will come out to 10 rupees. Okay. Now what is the meaning of 10 rupees? Any investor is ready to pay 10 times of the earnings of that share as compared to the current market price. So to earn 10 rupees per share, I am ready to pay 100 rupees per share. So it's as good as 10 is to 1, right? So to earn this 1 rupee per share, I'm ready to pay 10 rupees for that share. Now, is this concept of me paying 10 times extra of my earning, is this good? Is 10 times good? Is 10 times bad? What is this 10 times? This 10 times is nothing but the P ratio now. I hope you have understood what is P ratio. The number of times I'm ready to pay as compared to the earnings, that is nothing but the PE ratio. Now the question comes up is, this 10 times, is it really high? Is it really low? How do I interpret that? So very important point comes up is the interpretation of this 10 times. And that's what we are going to do immediately. So interpretation of PE is very important. That helps you to take a decision on whether I should buy this share or whether I should stay away from this share. Always remember, as a thumb rule, okay, there are going to be exceptions for this as well. But as a thumb rule, a lower PE ratio means that the stock is cheap. And a very high PE ratio means that the stock is definitely a bit pricey. It's a bit expensive. But the question is, what do you mean by cheap? What do you mean by pricey? For example, in our Excel example right now, 10 was the PE ratio. Now, whether 10 is cheap or whether 10 is costly. So I'll give you a very simple example on this. There is no specific rule. I can't say if PE is less than 15, then it is cheap, buy. If PE is more than 15, it is very expensive, don't buy. It's not like that. You'll have to compare it with something. So what can we compare it with? We can have two factors for comparison. Number one, compare it with the competitor. If the PE of a company A is lesser as compared to PE of a company B, ideally I can say A is cheaper as compared to B, which could be one of the parameters to say you may go ahead and buy it. Okay, one of the parameters, okay, not the sole parameter. If instead of comparing it with B, I compare A with all the peers as an average, as the industry average, that comparison is also possible. So how to do that? I'll give you a very simple example. I've opened up Money Control and in Money Control I've opened Infosys. Okay, so in Infosys I'm just scrolling down and once I go down, this information is readily available for me. So here you can see PE is 18.62. Can you guess what is 18.62? I'm ready to pay 18.62 times of the earning per share 18 गुना ज़्यादा पे करी हूँ मैं. Okay. But then is this 18.6 too expensive or not? As I said, I can compare it with a peer of Infosys. A very simple peer everyone knows is Tata Consultancy Services. So I've opened that on Money Control as well. Just scrolling down and here you can see PE is 24 for TCS. So Infosys was 18, TCS was 24. So definitely I can say Infosys is cheaper as compared to TCS. Now just because it is cheaper as compared to TCS, so I should go ahead and buy. Is that so? No. I'm sure you might have come across a very recent news about Infosys, wherein the stock price corrected by a huge percentage in a single day. For those who have read about it, you might be aware that there was a whistleblowing, a complaint received by the whistleblowing department, whereby few people who had blown the whistle, they said that the numbers of Infosys which have been posted, so basically the financial results, the P&L, balance sheet figures, they are cooked up. They are not the true figures, is what the complaint has been received. For those who don't know what is a whistleblowing, whistleblowing means any person in the system basically says that something is going wrong. Taya, kuch to gadbad hai. That's a whistleblowing. Okay, so this whistleblowing is taken pretty seriously if it is done by some authentic person. But the question right now here is, just because a whistle is blown, does it mean Infosys has wrongly posted its numbers? No, that's not the scenario. Now, actually investigations will start whether this is an authentic one or not. And that is the reason why, because of such a bad news which came up for Infosys, the price corrected a lot. So please be sure on this. Just because it is a lower P ratio, does it mean you have to go ahead and buy? No. A lower P ratio could be because of a bad news which is coming around the company. Okay. And simultaneously, a higher P ratio does not necessarily mean that it is expensive. It could mean that the company is so amazing that people are ready to pay more also. I'll give you a simple example. You take two phones, phone other and iPhone. Okay, I'm an iPhone user, so I have to say that. Okay, so I'm ready to pay like 1 lakh plus for an iPhone 11 Pro. People will say you're crazy, you're paying 1 lakh plus for an iPhone 11 Pro. Are you mad? So I may say that, yes, it's a premium thing. It has a lot of quality. Maybe I don't know anything about it, but still it's iPhone 11 Pro. So even not knowing each and every feature, I might say that it does deserve that much price. So what is this? This is investors' confidence. This is the user's confidence because of which the investor is ready to pay more. Okay, so please understand in a nutshell now. Lower P, ideally cheap, but does not mean go ahead and buy, because a bad news could have taken the P lower, right? Number two, a higher P ideally means it's expensive, but as I said, people, investors, if they have high confidence in the stock, they're ready to pay more also. That is why the P could be on the upper side. So as I mentioned, there could be two types of comparisons. TCS versus Infosys as an example. And second could be, compare this with the industry PE. Okay, what is the industry PE for the IT sector right now? It's 21.52. And here TCS is at 24. Still higher than the industry average. Maybe it does enjoy the premium valuations and that's why it is at a higher valuation. I hope you understood the interpretation part pretty well. Okay, there are essentially two types of PEs. One we call as a trailing PE and one is called as a forward PE. So whenever you check out here, I can't see that on Money Control, but in some websites, they write here PE and into bracket, very small letters, they'll write TTM. And what is TTM? Trailing 12 months. Okay, so TTM trailing 12 months is last 12 months ka data leke. They have come out with the PE. Okay, so trailing PE basically is derived from the previous data, that is historical data. And the second one, which is a forward PE, is calculated by using the estimated figures. Okay, so for example, we are in the month of October 2019 right now. Possibility number one, I have calculated a trailing PE based on 18-19 data. And possibility number two, I calculate a forward PE based on 19-20 data. Okay, obviously, you will agree with me that trailing PE will be much more authentic rather than compared to forward PE. But both can be used for interpretation or both can be used for analysis. Okay, so moving on, we did talk about individual stock PEs, we talked about industry PE. But what about a market PE? Instead of a market PE, we can talk about an indice PE. So let us say we are talking about Nifty PE or a Sensex PE. For a stock, it was very easy to get on Money Control. It is very much readily available. But can I get Nifty ka PE very easily? So it's very easily available. I just go on to NSE India website. Here you can go to products, go to indices. Then you can go to historical data. And here you can see PE, PB and dividend. I just click here. And let's say I want the latest data. So we're talking about, let's say 24th, right? And I say get PE data for me. Yeah. So here you can see that Nifty PE is 26.70. So right now I talked about Infosys, wherein we said that Infosys PE is 18, the industry PE is 21, but Nifty PE is at 26 right now. Now I happened to read many articles about how to interpret this Nifty PE as such, and I found pretty much interesting data which said that there was a survey done by maybe Economic Times or Money Control, I don't remember, but out of these two, wherein they had done an average for almost 18 years data for Nifty, and they said that on an average, the market PE is 18. Okay, right now we are at 26. Okay. Then they did some statistical data on that. They basically, it's like 18 is, if it's an average, then they try to take the standard deviation R squared. For those who are not from a statistical field, it's okay. It's like taking an average and trying to find out deviation. Isse niche, isse upar, something like that. Okay, trying to take limits in comparison with the average of the data. Okay, and a study, what they did, they said their conclusion was that if the Nifty PE is above 21, then Nifty is in the overvalued zone. And if Nifty is below 16, then it is in the undervalued zone. Okay. So now what does it mean? So I'll give you the example of above 21, because we are at above 21 right now. So it means that the market has moved, the prices of the various Nifty stocks, they have moved much higher as compared to the earnings of these stocks. I'll repeat, it's a very important point. What does a high Nifty PE mean that? A high Nifty PE means that their prices of Nifty stocks have moved a lot faster as compared to the earnings of all these Nifty companies. So what does it mean? Prices are much more than the earnings potential or their actual earnings. So can I say it's definitely in the overvalued zone in this case? Yes. And the statistical part, they said that if it's above 21, historically markets have corrected if the Nifty PE is above 21. Right now I'm shooting this video on 25th of October and we are at 26 PE. So ideally it is in the overvalued zone, and maybe if this statistics is proven right, we may expect a correction in the coming few days. So I hope you have understood this entirely about what is PE. We talked about the meaning, we talked about how to calculate, I talked about the two types of P's, I talked about stock PE, indice PE, I talked about industry PE, and very important point, I talked about how to analyze Nifty PE or any other indice PE. And I said if it's above 21, it's supposedly statistically in the overvalued zone. So be cautious while trading whenever Nifty is above 21. I'm not saying that don't buy or it's a panic situation or something like that. Not at all. Be cautious while trading is what I'm saying. So always remember, study well, study each and every parameter, and then only decide about investing in stocks. I guess you've understood it pretty well. Yes, that's it from my side for the day. Jai Hind. Bye-bye.